Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're shifting and moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can notice is that at the moment we have a market which is facing a quite strong monthly structure level. This area was acting as previous resistance here, preceding both these rejections to the downside. Then the market broke above that zone, and all this previous resistance was turned support here. And the market tested the level and respected it as support, creating this rejection to the upside. However, the market has now once again broken below the zone, so this previous support is now turned resistance, and the market seems to be respecting this zone as resistance. However, since it approached the zone with such a strong bullish momentum, there is the possibility to see the market try a bit harder to break above the level. Now, if it will succeed at that point, this level would be broken and there would be space for more bullish continuation, or the market could fail to break the level to the upside, and at that point a strong rejection to the downside is likely. But anyway, in this situation, since we have approached the level with such strong bullish momentum, there is a possibility to see a essentially more strong try of the market to actually break this level to the upside. Now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly standpoint, what we can notice is that we have a market which, in creating this rejection to the downside, is also printing this M pattern from a weekly standpoint. In fact, we can notice this strong impulse to the upside, then a correction that the market tried continuing higher. However, it failed and is currently rejecting to the downside. This could easily create an M pattern from a weekly standpoint, and after the creation of an M pattern, there would be a increased probability of seeing a potential push higher, completing the M pattern at the neckline. Now, when there is an M pattern, it's not every time, but when there is such pattern, there is, in my experience, an increased probability of seeing a potential push higher, also completing the pattern at the neckline. Let me find for you, for example, an example of an M pattern. We can see, for example, here the market created the M pattern, after that got rejected to the upside. So it's obviously not every time, but in my experience, when there is such pattern, there is usually an increased probability of seeing a potential rejection to the upside, completing the pattern at the neckline. Now, dropping down on the daily time frame, what do we see? Well, from a daily standpoint, what we can notice is that the market just created a strong impulse to the downside. Now, after the creation of an impulse and essentially a shift from a bullish market to a bearish market, there is definitely the possibility to see a correction, especially if the last move was an impulse. Because if we look closely, what we can notice here is that we have a market which was creating higher highs and higher lows. So clearly it wasn't an uptrend. Then the market shifted and created a new daily lower low with this impulse to the downside, essentially shifting from the creation of higher highs and higher lows to now the creation of lower lows and lower highs. So essentially, we had a clear shift from a daily uptrend to now a daily downtrend. And when there is a downtrend, what you would expect is obviously the creation of lower lows and lower highs, but this means that after an impulse, you would expect a correction. And since the last move was an impulse, the next logical step would be a correction. And in this case, a correction could even be in the form of that retest and additional try of the market to actually break above the monthly resistance that we have identified at the beginning of the video. So here in the daily time frame, especially because this area is previous daily support and resistance, there is the possibility that the market might want to go and test this level, which means that also would be testing that monthly resistance again and creating anyway a retracement after the strong daily impulse. That is definitely a possibility. Now, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for the JPY, what we can see is that with the last reports, net positions have been massively decreased. We went from having a positive net positioning of plus 66k net positions all the way down to now having a negative net positioning of minus 46.8k net positions, showing how institutions went from having more longs than shorts with 104k longs compared to only 38k shorts, all the way down to now having a very negative net positioning of minus 46.8k net positions with 125k shorts compared to only 78.9k longs. So clearly institutions have been moving aggressively to the bearish side for the JPY, but all currencies on the spot are traded against the USD. So institutions shorting the JPY are actually longing USDJPY, which increases the probabilities of a potential rejection to the upside, potentially going and testing this level. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this M pattern at the neckline. That definitely wouldn't surprise me. Now, all this general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg. In fact, if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website. Here, you can gain access to all my courses, so 26 plus sessions of courses that go from the very basics of becoming confident with charts to all the way to building automated trading algorithms using the MQL4 language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer to build and optimize those portfolios of strategies. So a lot of very interesting stuff that you really cannot afford to miss. You also have the possibility to gain access to the Trading Station software with Telegram notification integrations to really accelerate your learning and you're becoming confident with charts. You have the possibility to gain access to one-on-one private mentoring directly with me from your student dashboard, as well as the COT data software. And you also have the possibility as a student, this is only for already members, to gain access completely for free to my MT4 EA's algorithms for free again. And here, in fact, you can see that there is all the presentations of my algorithms. And if you continue to scroll down on the website, you will see that you have the possibility to gain automatically access with the email and password that you will create during the sign-up process. So definitely looking forward to see you on board and see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.